We'll talk more about a bunch of these stocks and the macro, but we do have some coverage on CNBC by another analyst, Brent Thill, on Palantir. Let's hear what he has to say as well.
The fundamental limit to Palantir's growth at this point is, can anyone besides America adopt at the rate America's adopting? The fundamental limit for Palantir is, can we keep up with the adoption that you're seeing, especially in U.S. commercial, which is just like, we do not have enough people. We do not have, we have a nascent sales force. We're doing our best. We have all these companies that are training on installing Palantir. They're getting up and running. We're doing our best.
That was just last week, our interview with Palantir CEO Alex Karp here at the New York Stock Exchange, when I asked him how big the company can ultimately get. You got a taste of that last night with earnings. Palantir now the best performing stock in the S&P 500 right now, hitting new record highs. The company reporting strong results and guidance fueled by what it calls untamed organic growth in demand for its AI products. That said, our next guest isn't convinced. Jefferies analyst Brent Thill joins us now. He's got an underperform rating on Palantir, did raise price target to 60 from 28. Brent, why are you sticking with underperform on this name?
Kudos to Palantir on the fundamentals, Sarah, but in the last 20 years in software, there's no name that's ever sustained this multiple. It trades over 55 times revenue, even if growth accelerated. Again, this company's growing 30%. It's not like it's growing 50 to 100. They're growing 30. And if you think about other stories that's got to these multiples, they didn't sustain, and growth at some point faded. And when that happens, the multiple implodes. So ultimately, it's not necessarily a call on Palantir. I think our view is we run a balanced portfolio and we like other names. You can buy Meta at 25 times earnings, not revenue, earnings, and get an amazing return and play the AI theme through Meta. You can own Google at 12 times EBITDA. You can own Microsoft at 25 times earnings. So effectively, our client base is more valuation sensitive. I've gotten 3 emails from institutional investors on this name. It's owned by mainly retail and the insiders of Palantir. So yes, is there an opportunity for institutional investors to own this at some point? Is that the next catalyst for the stock? Maybe. But ultimately, I go back to right now, the names that our clients are owning are names where they can have support and valuation. So I'm not against owning some of these higher flyers. But again, I think it has to be a lower percentage of your portfolio because ultimately we've seen this movie before. And
here's my issue. If it doesn't make sense at 105, it definitely doesn't make sense at 60 either. There's not like some dramatic difference in terms of the growth that would justify 60 to 105. So I would have respected him more if he just kept his $28 price target, because that's where he probably believes the stock should be trading. In reality, I don't think he has any clue about how to really analyze the stock, because if you're just going to bump it up another $30 off of what? Off of another couple of percentages of growth? Like it's either you believe in the thesis or not. So it is weird, the price target increase and still being bearish. But obviously I can also understand the argument that at $100, he thinks it is expensive, but it's also expensive at 60. It's not like this thing gets that much cheaper at 60. Okay, instead of trading at 80 times price of sales, at 70 times price of sales, right? So I think there's a more fundamental argument here that a lot of these analysts are not focusing on.
Does not end well on multiples.
But shouldn't we talk about why it's such a high flyer and the fundamentals of the business, which, okay, you mentioned the 30% growth. My question on Palantir is anyone else doing what they're doing in terms of the AI services they're offering, primarily to the U.S. government, which are now they're scaling across enterprise? And you heard from Alex Karp what the demand looks like.
Yeah, I mean, look, they have a unique solution from the application to the infrastructure. It is no doubt a unique story. And in that sense, the question is, again, how broad is this? And again, there's a lot of vendors that have AI solutions and AI infrastructure. So there's other ways to play this AI theme. It's not just Palantir. You can't listen to him and say, oh, he's the only game in town. That's not true. There's a lot of other games in town. So if you look at AI infrastructure, right, you've got Amazon, Microsoft, Snowflake. There's a number of assets you can own. Yes, if you wanted to complete a Palantir-like solution, you'd effectively have to take multiple solutions and stitch them together. So we believe Dr. Karp on that view. So we're not challenging the fundamentals. What we're trying to do is separate the fundamentals from the valuation. And again, those are important to do. I've been burned so many times in the past by sticking with, hey, it can keep running on the multiple. Now the multiple today is 55 times next year's number on revenue, not earnings, not on EBITDA, on revenue.
55 years worth of revenues is rich, to say the least. Listen, Brent, I applaud your willingness to sort of call it out. That said, I mean, they are accelerating in terms of their growth rate, 64% now for the commercial business. Investors always like that. And I can go back to the mid to late 90s as well. Yahoo, wouldn't have wanted to own it at 50 times revenues. I think it traded there, maybe even more. But Amazon, I would have, because, a lot of people didn't necessarily recognize the full opportunity. So give me your sense there.
Yeah, I mean, look, we all do TAM analysis, but now that the market cap's over 200 billion, you look at a company like CrowdStrike, where half of their, it's got less than half the market cap, is growing mid-20s to 30% and has good margins, and you don't have to pay, you can pay a fraction of the multiple. So I guess my point is, it's okay to own a piece of this, but my point is, we think there's higher conviction stories where I sleep at night not worrying about where the multiple is at. And ultimately, everyone's painting this big TAM picture. Look, if we did this across the rest of software and anyone in AI, we'd have multiples that are unsustainable for the industry. And so, again, I think we saw Snowflake get to 50 times revenue. We saw Datadog get to these multiples. And those multiples ultimately corrected. They went from 50 to less than 10. And so, again, I think that growth isn't going to slow in the short term. But again, I think investors are acting like this is a company that's growing 50% on the top line. They're growing 30, and they guided to 30. And maybe they can accelerate that growth this year. And so we're not disputing, again, the fundamentals. It's just the valuation is beyond anything we've seen. And it's basically 2 to 3 times more expensive than the next single expensive stock in software. So there's another cohort of companies like Samsara, Snowflake. You go through the list, there's a lot of great companies where investors can make good returns, where you're not exposing yourself to that level of multiple. Right. And again, I go back to David, the institutional investor community, they're not involved. Yep. They're not. And effectively, this is this has been fueled by a lot of the retail side of the house. And you can hear this company doesn't really talk to investors. They don't go to conferences. They don't return emails from institutional investors, but they will sit and compliment the retail investor all day long. And so I go back to like our client base are institutional investors.
I get it. I get it. Charismatic CEO, memification to a certain extent, but it's working, Brent. We'll have to continue the conversation.
I was wrong.
He also really doesn't like short sellers and has called them drug addicts, the other class of shareholders. Yeah. Well. All right, thank you, Brent. Brent Thill with Palantir up.
I mean, dude, every historical B2B software enterprise, you know how to interpret what he said about they don't respond to institutional emails? That's Palantir saying, fuck your steak dinners. We are not going to go out with you and wine and dine you so you could upgrade our fucking stock. That's what Palantir is saying by not responding to your institutional investor emails. They're saying, you know what? We're going to invite Amit to AIPCon and we're going to have him host the halftime show because we think that's just a better use of our time than engaging with Jeffries, who's going to say the same shit they've been saying for the past 2 years because they actually don't care about Palantir. They care about getting a bonus at the end of the year. That's really what Palantir is saying by not responding to these institutional analysts. And so look, he can be mad all he wants about that, but every enterprise software company that has gone down the route of capitulating to how Wall Street wants them to act, how Wall Street wants them to engage with investors, none of those have become the types of unicorns that Palantir potentially could become. And Palantir has a long runway to go. It is going to be a volatile runway, but the reason they're here today is because they're doing it their way. It's because they're doing it their way. Now, having said that, I don't think what he said was that different than what Steve said, which is, hey, fundamentals are incredible. Valuation is up there. I think all of us in the chat also agree with that. Fundamentals are incredible. Valuation's up there. But the inevitable conclusion to that, in my opinion, is as follows. If you got in early, you sit back and enjoy the ride. And if you need to take some profits, take some damn profits. But if you want to hold on, you hold on. because it looks like it can be a very exciting ride over the next decade. If you're just getting in, I would be a little hesitant given the premium you're paying. And maybe it works out in the short term. Maybe it works out in the long term. And there's a dip in the short term like that. That's more of a who knows what's going to happen. But if you've been here for a while, I think the story just gets better and better and better. And the stock will do whatever the hell the stock wants to do. I mean, that ultimately is up to the market. But the story, what's in Palantir's control is not the stock. They can't really affect that at the end of the day. But they can affect the execution to inevitably make the street, retail, whatever, realize that the stock deserves to be owned. And what they showed off last night is getting enough people to be excited to the tune of 26% on the day. We are up almost 30% to believe that Palantir deserves to be an investment opportunity. So there, I think that's the conclusion of it. It's really not that complicated, but it's kind of fun to see all the analysts try to figure out how to make sense of this. It is pretty incredible. This is one of the largest single day increases Palantir has had after an earnings. I think we had something similar to this last quarter. I think it was maybe 23%, 22. No, maybe we were at a little bit higher, 29%. But so far, 2 quarters in a row, we've been blessed by a stock that goes up more than 20%. And will that happen every quarter? I don't know. But for the past 2 quarters, it has indeed happened. Q3 and Q4 of 20. And on the most volatile days, August 5th and then February 3rd, the Japanese yen trade and then a trade war. That's when Palantir reports, and they end up reporting with some pretty amazing numbers. Pretty cool stuff. Pretty cool stuff right here. And that's what we got going on right now. Okay, so Grab. Again, we talked about it during the day. I know a lot of people are looking at this and they're saying why it's running. Someone gave a super chat and said, can you talk a little bit about Grab? The reason Grab is running is because of a acquisition rumor that is out there for them to potentially buy one of their largest customers. And if that ends up happening, that could change the entire narrative of Grab. So if anyone's curious about that, that is why it's happening. And I'll talk more about that probably later on the market close. Let me just link a Twitter account again for those that really want to deep dive more into Grab. I'm going to link a Twitter account right here that you should follow. And this guy's been tweeting about it all morning. He's from the region. He understands Southeast Asia very well. So you can follow him right here to get some more updates. And I'll probably do some more updates later throughout the week as we get more details on this potential acquisition. Matan, thank you. He says shorts have yet to cover. Still the same 50 million available to short on IBKR from when Palantir was 60 about 2 weeks ago. Yeah, so that's fair. Shorts are probably doubling down on this. They are not. I doubt the shorts are covering on this. I mean, maybe there's a little bit of cover. There's definitely not a cover for a squeeze because there's only like 80 million shares out of the 2.2 billion that are actually sold short. If I was a short, I mean, you have 2 options. Either you admit you were wrong and you say, screw it, I'm not gonna try playing this game anymore. Or you say, this is ridiculous, I'm doubling down. And given the mentality of shorts, I think they're gonna say, this is ridiculous, I'm doubling down. So I would not be surprised to see the short float increase. But if we get to 110, 115, that's when I think the shorts start to think, okay, this is getting pretty ridiculous, right? And that's when they might get out of it just because they don't want to lose their balls, quite frankly. So I think we're gonna have to see even a higher move for the shorts to get really upset. Because right now on a 1-day move, the shorts don't believe it. The shorts don't believe this is going to sustain 26%. And so I guess over the coming months, we'll see if it can. But I think right now shorts are probably doubling down a little bit more. It is Gab Growth, not Grab Growth. Gab Growth is his username. He just happens to also be bullish on Grab, even though his username is Gab Growth. Shout out to Evan right here in the chat. It was a great Twitter Spaces. Evan, are you still live with Dan Ives? Or is that ended? That was great, Evan, dude. That was awesome. Dan is such a pro. It was great talking to him. Okay, it just ended. Yeah, dude, Evan, that was great. Thank you for doing that, brother. That was so awesome. It was cool to get coverage from him on a day like this. Evan is creating new media. He's basically becoming our generation's CNBC and Bloomberg in terms of bringing all these people together. So shout out to Evan. Thank you for doing that. By the way, for those that don't know, Evan is Evan. What's your cost basis on NVIDIA? It's like $10 or something. Evan is early NVIDIA. He doesn't have like 100,000 shares, but it doesn't matter because he's up like 10,000% over. So it looks nice on the Robinhood brokerage statement. But he's been early in 7.5. Look at that, dude. 7.5 average. I mean, that's fun, dude. That's the funny thing is that's the same thing for a lot of people with Palantir, dude. 7.5 average. Okay, here's a fun story for the chat. Here's a fun story for the chat, or a fun question for the chat. Describe me a time where you bought Palantir at that $6 to $9 range. Like, where were you? What were you doing? Were you, I don't know, at a party? Were you bored? Like, I've used this story many times. I have a bunch of examples, but one of the most examples that I remember the most was I was on my way to the chiropractor because my back had a bunch of issues in 2021. And I just remember I would check up the stock. I didn't have a lot of money, but I would just buy 100 shares here and there. Not even 100 shares. It'd be like 30 shares, 40 shares. It'd be whatever I could afford because I was pretty broke back in 2021. And just swiped up while I was driving. I would be at the chiropractor. There usually was an hour-long wait. I would swipe up again. It was just like that. That's the biggest memory I have in 2022 when the shit was hitting the fan and I was buying. Now, I spent a lot of money buying in the $12 range. Remember, my average was 25, so it took a long time to DCA. But it was after Kathy had liquidated the portfolio, and I got so upset at her, I sold all of my ARK, and I bought Palantir at $10. And I sold ARK at like $88, and Palantir's now at 80. ARK is at 40, but or 50. So that's when I remember buying a decent chunk when it was falling Bradley. And I also bought a ton when it was at 25 in 2021, 23. So, and then obviously those were pretty bad buys at the time. But those were the memories back in 2022. It was doing random stuff, driving, waiting at the chiropractor and just swiping up, even if it was for like 10 shares. It was just anything you could put into it at the time. Daniel says I was here on the channel. I love it. I was watching your videos about Palantir. I love it. Thank you for being here. Rezul said I was buying at 22. Beneficial said I bought Palantir at IPO for $10 and sold at $10. That's my story. Of course, I bought back in later, but still never held like a clown. Yeah, it's hard, dude. It's hard to hold on to it. You've done very well with Hood, though. So, I mean, I wouldn't stress too much about it, but it's just been a crazy, crazy journey. Protoman says I was at work. Reem says it was my beginning in stocks and now I'm mad about it. It was my beginning too. I mean, I think everyone made plenty of mistakes on this name because it was one of the first big winners for everybody. And we all obviously would have bought a lot more if we knew it was going to be this much of a winner, but it's, it's doing what it's doing and it's getting rewarded very heavily by the street. Tess says I was buying heavy at home, arguing with ill-informed trolls. Chris says I was walking in my town and listening to it in the morning. Michael says I was returning bottles after work to get that extra $15 to $20 to put into Palantir to get those 3 extra shares. See, this is why the story is so special. I mean, that comment right there is why the story is so special. I feel you, bro. I was, I had a job as well, and it was not a lot of money that was coming in every month. I had my own expenses. Thankfully, I was able to live at home, so I didn't have to pay rent. But whatever I had left at the end of every month, just tried to dump in whatever we could. Davis says, I was rejected to all my school programs, just was broken up with, and working as a server. No direction in life, felt like rock bottom, felt like a loser. I was at rock bottom. For those that don't know, Davis is sitting very nicely on a decent chunk of Palantir. And I know that because I'm a good friend of his. But yeah, I remember at the time, bro, I remember you were one of the first people I interacted with on Twitter. You were working at Cheesecake Factory. You just got broken up with. And the only thing you were kind of doing was buying Palantir. And so looks like she shouldn't have broken up with you, because I don't know if her new man is sitting on 7 figures of Palantir. I don't know if that's happening. I was convincing the wife to double down after having a bag at a $25 average and bought the average down to 11 over the following years. She has the biggest smile nowadays. You're talking about brownie points with the wife. That's some freaking brownie points with the wife. That's some freaking brownie points with the wife. I sold both my kidneys to buy at $5. Dude, I think the low was $5.84. That was the absolute low that day. Do you guys remember December 2022? It just got so bad, dude. Sentiment was so bad for everything in the market. That was the day where it had bottomed. There was an inside joke. There was a Seeking Alpha article that came out that says Palantir's going at $5, and all of us in the community were shitting on the article because the article was like trending. And then that day when we saw 580, we were like, well, I guess this article is about to be right. Like, it was that bad, dude. December 2022, Taco Bueno parking lot, traveling for work. I bought it at $6.48. Time and time again, these are the stories. And it's just incredible, dude. It's just incredible. I was dead broke and I just got broken up with during COVID, buying Top Shot NFTs, trying to get rich, lost it all, had to gig work to make it back, found Palantir, found him its channel, up $200,000. It's just so special, bro. It is so freaking special. Kenneth says lowest I bought was at 632. Yeah, man, it's a hell of a story. It's a hell of a story. And this is how the story is playing out.